JSW Steel is also expected to come out with the numbers. I'll get to you in just a bit. But Amit, what are the key expectations from JSW Steel this time around?
Tata Steel swung back into black. JSW, the expectation is that quarter on quarter there will be a 45% decline in net profits. The calculation for year on year is not applicable because they were in losses the same quarter last year. The company is expected to post a net profit of 3,556 crores for the quarter gone by. The net sales are also projected to at 44,799 crores, down 1.8% quarter on quarter. So that is also going to go. Mostly their orders have gone down, and also the operating cost because of the increased price of coking coal has affected them. Their EBITDA per ton is likely to decrease 14% quarter on quarter to 11,000 rupees per ton for the quarter gone by. The coking coal impact is estimated to be around $30 per ton for JSW Steel's India operations. Moreover, the expectations for the top line growth, as mentioned, is expected to be relatively flat. When I look at the stock today also, JSW Steel, it is down marginally 0.38%. Gaurang, when we come to the steel stocks, whether it is Tata Steel, that is also just marginally up and down in the last 1 week, or even if we look at the last 1 month. Same is the story with JSW Steel. Now I'm looking at Jindal Steel also. That is also marginally up 0.5%. But if you look at the seen the last 1 week or so, it has been either up or down. No major gains. Same is the story with steel, which has gained a little bit more. But what do you make of steel stocks and JSW in particular?
So, first of all, Amit, let me highlight the coverage universe as far as Geojit Financial Services is concerned. In the entire ferrous, non-ferrous pack, positive on both the names that you spoke about, JSW Steel and Tata Steel, followed by Hindalco, Vedanta, and JSPL. The problem with the entire metal sector is not only locally but globally as well. And of course, the great news flow that comes out from China and the fluctuation in the commodity market. Given the domestic, backdrop, we remain optimistic because we are of an understanding that infrastructure building activity, which is kicked by the government at center and at state levels, by respect to state governments, is going to continue, and that is going to have a decent uptick in terms of demand for both cement as well as metals. Input cost over the last couple of quarters, if you go to see, has come down to a certain extent, barring 1 or 2 commodities, which is an integral part of that input cost. Pricing factor as far as flat and long products are concerned, we believe slowly, gradually we'll see an uptick as the demand picks up. But it is not that you will see a major turnaround immediately in the short to medium term for the metal pack. You need to have patience if you are selecting metals as a universe to invest in, and you need to have a very longish time frame compared to the other sectors like maybe banking or FMCG or autos. When it comes to metals, you need to have at least double the time horizon. For example, say for the other sectors, you have a time horizon of maybe about a year and a half. Then if you're investing in metal, you need at least 2.5 year plus kind of time horizon for a meaningful turnaround in terms of numbers and thereby reflecting upon the prices.